Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 26th of April. My name is Russell Shoma, Senior Market Specialist at FXCM, and my email address rshore@fxcm.com. And just going to bring up the disclaimers. We'll start off with a high-risk investment warning. I'll keep this on screen for a few moments. And if I can perhaps just confirm, can you guys hear me, see me, and see the screen? Okay, thanks, Kobus. Okay, thank you everyone for joining this morning. Let's just bring up the market commentaries disclaimer. Okay, and the reference is Market Scope, Trading View. Just to give you an idea, we'll go to the top of the hour, then we'll switch to the crypto minute. This is, I'm finding a very hard market. It's a tough market. Yesterday we saw a risk-off movement. Why did we see that risk-off movement? Because there is concern over the regional banks with the First Republic results that came out. So I want to take a longer-term view here and not get sort of lost in the noise. So we're going to go through to trading view first, and we're going right through to the monthly chart. And I've got the COPOC indicator at the bottom. And the COPOC indicator, whilst not infallible, there have been definitely instances where it's given false signals. It is generally a good indicator to take note of. And the way that we use the COPOC indicator, it's only used on a monthly chart. It's only used to measure if there are potential bull markets that have started. The signal is twofold. Number one, it's got to be below the zero line. Number two, it's got to turn up. Okay. I have seen articles where it says it's got to cross the zero line. That's not what Edwin COPOC's indicator signal was. It was just turning up below zero. And we're taking a look at the SPX 500, the S&P 500, and it's turned up. Okay, so if we just take a look at previous signals, it turned up below zero here, and there was a nice bull market that followed. We go back to the 2008, 2009 global financial crisis. It turned up, led into the nice a nice bull market. And I have a story around sort of the global financial crisis. I once went into a trading floor, and I was speaking to one of the traders, and I said to the traders, I think the bear market is pretty much near its nadir, near its bottom. I think we're going to see it turn up. Why did I say that? Because the COPOC had given this, and he said, no, I think there's more to go. Turns out the COPOC gave a really nice sort of indication of when the bear market was over. If we go back, here's where the whipsaw is. So we're going back now to the tech rec. It gives a premature signal over here. Why is there no border there? Let me put a border in. There we go. All right, so there was here, it was an early signal, and then it flashed the second signal over here. So this was the whipsaw, but is generally given remarkable signals previously on the S&P. Really remarkable signals. I've missed one. So we can see we are right here on the S&P. Let's take a look at some of the other indices. Okay, so we'll go through to NASDAQ. And the Nasdaq will be more pronounced in the it will be a more pronounced whipsaw during the tech wreck, in that it really gives the signal over here. It's quite early. Let's just put in the horizontal line, make that 0, and you can see that there are some remarkable signals here. Copoc gives a good one over here. Gives a good one over here. Remember, this is a monthly chart. Gives a great one after the global financial crisis. And it's just turned up here as well. Okay, a little early. So again, not infallible. This is a early signal there. So we take a look at the Copoc. We see that it's turning up. Is it a hard and fast signal that the bull market has effectively started? 80% of the time. So that 20%, that margin for error, says we still got to be discerning, right? We still got to look at company fundamentals. We still got to look at trends, and we've got to make sure that we're trading with the trend. Let's just take a look at a few more. Let's take a look at the Dow Jones. I'll just use US 30 here. Just taking a look at the Dow, and this is the FXCM instrument. And what we'll do is we'll put in the horizontal line at 0. And we'll just take a look at two more after this. So I want to take a look at the small companies index, which is the Russell, and I want to take a look at DAX as well. Okay, so let's just bring that up. And let's look at the long-term signals here. So a really nice one over here. A really nice one over here. Again, a good one over here. This was after the 1987 crash. Okay. Here's the tech wreck. So the tech wreck, again, showing some sort of whipsaw over there. Nice one over there. That's the global financial crisis. Beautiful signal over here. This is straight after the lockdown period, so it gave a really nice signal into that bull market when there were, which was driven effectively by the liquidity injection. And yeah, we're getting it pushed up again. So we're seeing the Copoc giving these long-term signals. Let's just do two more, and then I want to show you where I think the concerns may be, and we shall talk about the concerns as well. Hey, Howard, morning to you. Welcome, and nice to have you on the webinar as always. All right, let's just take a look at the Russell 2000. So here, the CFD code is US 2000. The problem with this is it's a fairly new CFD, so we don't have the history here. So what I'm going to do, I'm actually going to use the code RUT, which is the Russell 2000, and we'll just take a look at the index CFD from TradingView. And what we can do here is put in the horizontal line at 0. Okay, let's put it in at 0. And let's take a look at the signals here on the Russell. Okay, nice one over here. This one, just good one over there. This one is a short-lived. Okay, so I'm going to say this one is a whipsaw. Okay, this one looks like a whipsaw. So a little bit more volatile on the small companies, but then it leads into a really nice one here. So the tech wreck problematic again. Here after the global financial crisis. Good one over here. This one's over after COVID. Let's be strict. let's put in, so a little bit more volatile in terms of the small companies. I think that makes sense. Smaller companies will be more volatile. And then we've got a nice kick up here, but it's struggling. Okay, so we just want to watch. For a bull market to really take hold, there has to be cooperation from the small companies. There has to be, the small companies have to participate. There has to be participation from the small companies. So this over here, we want to keep an eye on whether this whipsaws or not. If it whipsaws, then I think it can filter through to the other COPOC signals. And I think the Russell 2000 is a good filter for us to apply. So we'll carry on using this as a filter. Let's just take a look at one more, the DAX. Yeah, we'll use the FXCM German 30 instrument. And let's throw in the zero line here. DAX definitely one of my favorite charts at the moment. And good one over here. Good one over here. Good one over here. This is the TechRec. So TechRec, on all the ones we've looked at, had some problems. Good one there. Good one there. Short-lived over here. Short-lived over here. This is the lockdown. This is COVID. Okay, this is the pandemic. But then we get the turn up here, and now we get the turn up here. So these are all looking pretty positive. Now, what's happening is we're climbing what's called the wall of worry. There's a lot of a worry in the markets, and I think justifiably. In terms of how a bull market unfolds, okay, let's just add this in before we look at the regional banks, is that a bull market and a bear market, but we're just going to concentrate on a bull market, unfolds in 3 stages. Okay? And this is Dow theory. And the first stage is what we call the renewed confidence. If anyone's got the McGee and Edwards book, you'll find it there. Renewed confidence. Here you've got improved earnings. Okay. And then you've got the most dangerous stage, the place where the most money is made, but where the most losses are made as well. And that's the rampant speculative stage. We'll call it rampant speculation. Speculation. So the clue about renewed confidence is where the market stops reacting to bad news, which is kind of what's happening at the moment. There is bad news, but we see these bull markets. The FTSE is different. Anna's asking for the FTSE. I did look at the FTSE. The FTSE is different. The FTSE is different because, well, the FTSE 100, let me say, is different because of the high weighting towards commodities and oil. So the FTSE is, when we take a look at the UK 100, Anna, it hasn't dropped below 0. In fact, it's near all-time highs. A slightly different makeup in terms of the index. What I want to show you guys is the weekly chart of what's called the KRE. Let's just bring in KRE. This is the regional banking ETF. And this is where a lot of the issues are. And you can see it's actually been hammed. And I think that in order for the bull market to have the legs, we need to see some sort of stabilization in the regional banks. And we haven't seen that yet. In fact, let's add in the COPOC here. COPOC's generally used on an index level. I have seen it used on individual instruments, but that's not the way Edwin COPOC originally intended it. Let's put this the 0 in. And you can see that we are under zero, but we just needed to turn up. Okay, we just needed to turn up. So there is value. There is value. When I say there's value, we're in the value region of the regional banking ETF, but it hasn't really been recognized yet. There's still a lot of headwinds here. So the First Republic had a deposit run, maybe run's a bit harsh, but it certainly had a lot of money withdrawn from it. It's now selling a lot of its assets, and what tends to happen here when there is a crisis, management responds, streamlines the business. When the portfolio managers recognize that, we should see the COPOC indicator turn up, but we haven't quite seen it yet. What's interesting in terms of the US banks basket, so this is we've just gone to market scope, and if I go through to the US banks basket, which is made up of large banks, so JP Morgan would be in there, Wells Fargo, Citi, etc. It has moved from zone 3 into zone 2. So there has been some sort of stabilization on the weekly. But what's happened on the daily chart is yesterday, the results from First Republic did scare the market. And you can see on the daily chart, it's dropped from zone 1 back into zone 2. So I want to see the banking indices stabilize. I want to see those move back into zone 1 on the daily. On the weekly, I want to see it continuing to move up. What we can do on the weekly chart here is actually, let's take out the, let's go to this one over here. And what we can do is add in a 30-week moving average, which is what Stan Weinstein in his book, the title's How to Profit in a Bull and Bear Markets. Quite a strange title, but it's actually a really good book. He uses a 30-week moving average as his filter. And let's just make this black and a little thicker so we can see it. I would like to see the US banks basket move above that 30-week moving average, and for that 30-week moving average to turn up. That would be a good filter for us to see some sort of stabilization. That would also be climbing the wall of worry. That's what we're seeing right now. We're climbing this wall of worry. One final chart, because I'm cognizant of time, we just take a look at the US dollar. Why the US dollar is a good instrument to look at, it's really a proxy for risk on, risk off. If there is a risk off feeling, money does pile into the dollar because it's a safe haven. We're sitting neutral still. We're still sitting neutral there. So the market's kind of making up its mind with this wall of worry. And that's why we see, yes, there's signs of a bull market, but there's that dichotomy. We just need to see the stabilization in that regional banking. That keep an eye on that KRE, see if the COPOC kind of stabilizes, kicks up. All right, I think that's where we're going to leave it for now, because I want to go across to our crypto minute. If there's any questions, go ahead and type those in. We've got about a minute left. Any questions, go ahead and type those in. I think not this Friday, next week Friday, we have the live trade, don't we? It will be the non-farm payrolls. So be be ready to get the link for that. All right, guys, let's wrap up here. Thanks, Gertie. Have a great day, guys. Great evening, and please join me for the crypto minute. Thank you very much.